Manishi Raychaudhuri, equity strategist for India Pacific at BNP Paribas. He's joining us on the show right now. Manishi, thanks very much for taking out the time. Before we get onto equities, obviously the hot topic for today is what's happened in crude and the cut that we've seen in the bear market for both Brent, WTI. What do you see as being the peripheral impact of the same across global equities as well as particularly the Indian equities?
In general, I would think for Indian or Asian equities, it should be treated as a positive. By and large, the Asian economies are importers of the commodities, and there are large Asian economies like India and Indonesia which are large importers of crude. So that's obviously a good news from the perspective of inflation, current account deficit and fiscal deficit of these markets, and in that respect particularly India stands out. As far as the global economy is concerned, I think the indication or the consequence is possibly mixed, because it also tends to indicate some degree of demand slowdown. Even though I would think that the present round of massive correction, almost about 24 to 25% over past 6 weeks, is possibly more attributed to the geopolitical churnings that we have seen. Also, the U.S. reaching the agreement to give a waiver to the Iran sanctions to 8 large importers and that. So all these things have, possibly contributed to this oil price correction that we've seen. But, on the whole, for Asian equities and particularly for Asian currencies, that's obviously been a positive tailwind.
Manishi, from a person who's been observing India, while we've been talking about several macro factors, we've been tracking the earnings as well from a micro perspective. This time around, Q2 numbers, more in line and slightly borderline disappointing rather than the other way around. In terms of internals, how have you broken them down as to make a case of investment for India?
Right. So very rightly you pointed out that this particular quarter's numbers have been borderline disappointing, and this is a bit of a departure from what we had seen in the past 2 quarters when the numbers were actually slightly better than expected on the whole. We have seen a reflection of this in the earnings estimates. Over past 3 months, the consensus EPS estimate for both fiscal year 2019 and fiscal 2020 have declined about 7% or so, and that's pretty sharp, to have it over last 2 to 3 months. We think this is possibly the Achilles heel as far as Indian equities are concerned. Even though the market corrected about 10% from the peaks in September, the valuations didn't correct all that much as a consequence, because the earnings estimates also came down. And we think that as a consequence, India's valuation premium to its peers in Asia is still maintained at a relatively high level. And I think that's one of the headwinds to Indian equities outperforming its regional peers at the present point in time.
Good morning, Neeraj here. What would your global clientele be telling you about India now that the big overhang of crude for now is not a worry?
Right. Yeah. So, I think clearly to the global investor base, this decline in crude has come as a positive surprise, particularly when their investments in Asia and the countries like India or Indonesia are concerned. And we could actually see, therefore, a degree of a renewed fund allocation to India and possibly even a relief rally. Now, having said that, crude prices are notoriously difficult to predict because they move in, as a consequence of so many different drivers. So I don't think the international investor is still willing to hang his hat on a sustainable decline in crude prices to an even lower level. They're obviously closely watching this pace, and the most recent tailwind has clearly come as a positive for them. We must remember that overseas investors also take a currency risk when investing in India, and currency stabilization has possibly been one of the biggest relief factors. But I personally think that the foreign investor who actually reduced his position in India by almost about 1.5 to 2 percentage points over last 1 year will be in a mood to wait and watch and only make small adjustments to his India position for now.
Would your advice be, Manishi, to your global clients? I mean, would you advocate the same approach, that stay on the sidelines, or if you are putting in money, put very selectively? And what should one wait for? Should one wait for some sustainable decline or sustainable levels in crude prices, or should one wait for the elections to get out of the way? What would you advise your clients?
Yeah, it's a combination of all these factors that you mentioned. We downgraded India from an overweight to neutral in late June or early July, so about 5 months ago. We're still maintaining that position. It has worked the way we thought it would. India has outperformed rather underperformed over the last 3 to 4 months as a consequence of the sharp currency depreciation that we had seen. And many of those factors, the biggest concerns or the biggest worries are possibly now behind us. We're seeing a stabilization in commodity prices, particularly crude, and as a consequence, we're seeing a stabilization in the currency. That is also coming as a significant easing factor as far as the monetary policy is concerned. Notice that inflation over the last 3 months has been undershooting the RBI's reference range. And as a consequence, we think the RBI may not really need to increase interest rates immediately, clearly not in December, if necessary only in the first quarter of next year. So all these things, the macro factors, are possibly turning out to be better over the last 1 month or so. What is not so good, and I alluded to this right at the beginning, is the earnings estimate, which continue to keep declining. There was a bit of a lull in the first half, or the first 2 quarters of this year, as far as the earnings estimates were concerned. They were flattish. They didn't decline all that much. But over the last 2 to 3 months, we have seen these earnings estimate declines again come back with a vengeance. They have happened in the public sector banks, in the non-banking finance companies. We have seen them in the consumer discretionaries, in the auto space, which was hitherto quite resistant to the demand pressures. So I think the earnings estimate trajectory is the most important variable that investors are watching today, and so are we. We must keep in mind that, at least in the first half of this year, North Asian earnings estimates were relatively resilient. Of course, now they have declined over the past 3 to 4 months. So Indian earnings estimates need to catch up with the other Asian peers, or even part of the developed market peers, before we can be sanguine that the valuations are really indicating better futures going forward.
Right. Manishi, you've closely watched auto as a pocket. Anything there that probably propels you to take it as an opportunity to reevaluate an entry into the auto space, and then again, any other pockets of interest?
Right. Okay. First, regarding auto, yes, I think the correction in the stocks that we have seen, there are large frontline auto companies who are market leaders in their respective segments, which have corrected about 30 to 35%, even more in some cases. So I think the auto sector, both the four-wheelers, the passenger vehicles, and the two-wheelers, are selectively providing entry opportunity for investors. As far as the other sectors are concerned, we are positive on the private sector banks. We are also positive selectively on the non-banking finance companies, which have corrected massively as a consequence of the liquidity concerns. I think the market has painted that entire sector with a broad brush, and within the NBFC space, there are a few decent, good companies which are engaged in profitable businesses, like the consumer lending NBFCs in particular. We also like the oil space, the oil refining space, again selectively, partly because of the decline in oil prices, which lifts the concern about increasing subsidies on that sector. And finally, we think that despite the fact that the currency is now stabilizing, I think the Indian IT service companies, particularly the large frontline IT service companies, which are possibly in the process of changing their business models, they would also make sense over the medium term.